So you want to get in the game. You want to make some real money, not chump change. I'm talking about building serious, long-term wealth. Forget letting your cash sit in a dusty old savings account getting eaten alive by inflation. That's a loser's game. The real action, the place where fortunes are made, is the stock market. It's not some scary exclusive club for Wall Street suits. No, no, no. The stock market is for you. It's for the little guy. It's your ticket to financial freedom. It's time to stop being a spectator and get on the field. So, what is this market? Think of it like a giant, sprawling marketplace. But instead of selling fruits and vegetables, this market sells tiny pieces of companies. These pieces are called stocks or shares. When you buy a stock, you're not just buying a piece of paper or a number on a screen. You're buying a small slice of ownership in a real business. You become a part owner of Apple or Ford or that hot new tech company everyone is talking about. You're betting on their success. If the company does well, makes a lot of money and grows, the value of your piece goes up. That's how you make money. Why should you care? Why invest? Because your money needs to work for you. It needs to be out there hustling, growing and fighting for your future. Leaving it in the bank is like putting your star player on the bench for the whole game. Inflation, the silent killer of wealth, slowly chips away at its value. Investing is your offense. It's how you put points on the board. It's the single best way for regular people to build wealth over time. This isn't about getting rich overnight. This is about a long-term game plan to secure your retirement, buy a house or pay for your kids' college. It's about taking control of your financial destiny. The beauty of the market is that it lets you participate in the success of the greatest companies in the world. When you hear that a company had a blockbuster quarter, that their new product is flying off the shelves, you get to share in that victory. You're not just a consumer of their products anymore, you're an owner. Their wins become your wins. The stock market is the engine of capitalism, and it's the most powerful wealth creation machine ever invented. It's time for you to grab your helmet, get in the huddle, and learn the plays. Are you ready? Let's make some money. All right, let's get down to brass tacks. You need to know the lingo to play the game. First up, stocks. I already told you, a stock is a share of ownership in a publicly traded company. If a company has 1,000 shares total and you own one, you own 0.1% of that company. Simple, right? Now, some companies reward their owners, their shareholders, with a piece of the profits. This is called a dividend. Think of it as a thank you check mailed to you just for owning the stock. It's beautiful. Not all stocks pay dividends, but the ones that do are often solid, stable companies. They are the workhorses of your portfolio. Now let's talk about risk. Every investment has it. There's no such thing as a sure thing, and anyone who tells you otherwise is a clown. Risk means the price of your stock could go down instead of up. A company could have a bad quarter, a new competitor could emerge, or the whole economy could hit a rough patch. That's part of the game. But here's the secret. You manage risk by not putting all your eggs in one basket. This is called diversification. You buy stocks in different companies, in different industries, some tech, some healthcare, some consumer goods. That way, if one sector gets hit, your whole portfolio doesn't get wiped out. So how do you actually buy a stock? You need a brokerage account. Think of it as a special bank account for your investments. Opening one is easy. You can do it online in minutes from your couch. You go to a reputable firm like Fidelity, Charles Schwab, or Vanguard, fill out some forms, and link your bank account. It's simpler than signing up for a new streaming service. Once your account is open and you transfer some money into it, your homework money, your seed capital, you're ready to pull the trigger. You are officially ready to buy your first stock and get in the game. Let me give you a taste of the power here. This is the magic of compound growth. Let's say you invest $1,000 and it earns 10% in a year. Now you have $1,100. The next year you earn 10%, not on your original 1,000, but on the new total of 1,100. So you make $110. Now you have 1,210. your money starts making money, and then that money starts making its own money. It's a snowball of wealth rolling downhill, getting bigger and bigger and bigger over time. That, my friend, is how you build a fortune. It's not timing the market, it's timing the market. Listen to me, and listen good. Newcomers make the same dumb mistakes over and over. I see it every day. The biggest one? Panic selling. The market has a bad day, a bad week, even a bad month, and the rookies run for the hills. They see red on the screen and hit the sell button, locking in their losses. Wrong, wrong, wrong. Volatility is the price of admission. The market goes up and down. That's normal. The winners are the ones who have the guts to hold on through the tough times. Selling in a panic is like fumbling the ball on the 1-yard line. Don't do it! Another classic rookie blunder is chasing hot tips. Your brother-in-law, your barber, some clown on an internet forum tells you about a sure thing that's guaranteed to triple. Run away. That's not investing. That's gambling. You are setting yourself up for disaster. You must do your own homework. What does the company do? Are its earnings growing? Does it have a strong management team? Is it in an industry with a future? You wouldn't buy a car without looking under the hood, so for the love of money, don't buy a stock without doing your research. Homework is the foundation of all winning investments. Here's another one that drives me crazy. Falling in love with a stock. You buy a company, it does well for you, and you start to think it can do no wrong. You ignore warning signs, you make excuses for bad news. This emotional attachment is poison. You have to be disciplined. You have to be willing to sell a stock if the story changes, if the fundamentals deteriorate. Your stocks are not your pets, they are not your children. They are tools for building wealth, and if a tool breaks, you replace it. Don't let love blind you to the facts. Finally, rookies often try to time the market. They wait for the perfect moment to buy, or they try to sell at the absolute peak. It can't be done. Nobody, and I mean nobody, can consistently predict the market's short-term moves. People who try usually end up buying high and selling low, the exact opposite of what you want to do. The winning strategy is to invest consistently over time. Buy a little bit every month, every quarter. This is called dollar cost averaging. It takes the emotion and guesswork out of it. It's a disciplined approach, and discipline is what separates the winners from the losers. So you know what the market is, you know the lingo, and you know the mistakes to avoid. Now, how do you build a winning game plan? First, start now. Not tomorrow, not next week. Today, December 26th, 2025. The biggest advantage you have as an investor is time. The longer your money is invested, the more time it has to compound and grow into a monster. Even if you can only start with a small amount, just start. Get some skin in the game. The power of compounding is a freight train, and you want to be on it for as long as possible. Don't wait for the perfect moment, because it will never come. Next, know what you own and why you own it. This is the core of my philosophy. For every stock in your portfolio, you should be able to explain what the company does and why you think it's a good investment. Write it down. This simple exercise forces you to think critically and prevents you from buying on a whim. Is it a growth story, a value play, a solid dividend payer? When you know your thesis, you'll also know when it's broken and it's time to sell. This clarity will give you the conviction to hold on when the market gets choppy and others are panicking. My third tip is to think long-term. The stock market is not a casino. It's not a get-rich-quick scheme. We are building wealth, not chasing lottery tickets. The daily noise of the market, the ups and downs, the endless chatter from the so-called experts is just that noise. Tune it out. Focus on the next 5, 10, 20 years. Find high-quality companies with strong balance sheets and great leadership, and let them work for you over the long haul. Patience is not just a virtue in this game. It is a requirement for victory. Be a patient owner, not a frantic trader. Finally, never stop learning. The market is always changing. New technologies, new trends, new leaders. The greatest investors are lifelong students of the game. Read company earnings reports. Watch the financial news, especially my show, to stay informed. Learn about different industries. The more you know, the more confident you will become, and the better decisions you will make. This isn't a one-time lesson, it's an ongoing education. Now you have the playbook. The ball is in your hands. Go out there and build a legacy. Booyah.